Hello and welcome to our conversation on the PwC Africa Valuation Methodology Survey. I am Caitlynn Kuppan Luke, and I'll be your host for today's special episode as we launch the 11th edition of the survey. I'm joined today by two leaders in the field, Jan Groenewald, PwC Africa Deals Leader, and Matthew Human, PwC South Africa Valuations and Business Modelling Leader. And later, I'll be joined by Wadzanai Kajawo and Zahir Mukadam, who are associate directors in the team. Today, we'll explore how the survey has evolved over the years, what the latest data tells us, and how you can use it to make better decisions. Let's kick things off with who contributes to the survey and why is the participation so important? Matthew, would you like to start us off?
Sure, happy to do so. Thanks, Caitlin. So the respondents to the survey come from a very wide range of backgrounds. We've got corporate finance houses, we've got investment banks, we've got other accounting firms, we've got various other individuals at corporates, including our clients. And these are all people who are involved actively in transactions and deal making. So what we find is that the results of the survey give some really good insight into valuation methodologies and what inputs they're using in terms of getting to their valuation outcomes.
That's true. And Jan, this is the 11th edition. That's quite a milestone. How has the survey evolved over the years?
Yeah, Kate, it's quite interesting. When we started out, the survey was very much aimed at a South African audience, with looking at technical valuation aspects that were being used as assumptions in people's valuations across the South African market. Over time, that survey has found a home in many of the offices of valuation practitioners across the country, but we also have seen universities use it. We've also seen people using it in textbooks, etc. We've also started to see that the need also exists for something similar in East and West Africa, and we've expanded it to East and West Africa. And then we've kept with the times where we are now using technology in the form of an app to bring the survey to our audience, and we've done away with the printed bound copies in the interest of being greener.
It's also very interesting how the users of the survey have changed. Back in the day, early 2000s, when it first came out, it was mainly valuation specialists such as ourselves who found the survey results interesting and useful. But what's happened now is we're finding more and more CFOs, investment committees, and others using the survey to validate and benchmark their valuations.
That's a great point. Let's continue to build on the evolution of the survey. How have the topics of interest changed over time?
So yes, the survey has certainly moved with the times over the years. In each one of the editions, there's been additions of questions that reflect the economy and the signs of the times. In the early 2000s, we had topics around startup businesses and venture capital, technology businesses. In the current edition, the focus is very much on the infrastructure sector, which is a booming sector in the South African economy, as we build more renewable energy plants, etc. And looking at those valuations is a key part of the survey today. And I certainly think we will continue with that trend going forward to add topics that are interesting to our readers of our survey. For example, in the current environment, we're seeing rapid changes on macroeconomic drivers like inflation expectations and risk-free rates. And I can easily see future editions of the survey also dealing with those topics.
Yeah. So Matthew, I'm sure our listeners want to know, what is the process behind the survey? Would you mind sharing with us?
For sure. Thanks, Caitlin. That's a great question. So we start off the survey by preparing and issuing a detailed questionnaire that goes to all our respondents. And we then collate those results, analyze them, stratify them by region, so East, West, and Southern Africa. And then we use that to populate the survey that we push through in the app. We've got about 35 responses in South Africa alone this year. So I think we've got a very good, solid base to get some good insights going forward.
Yeah. And lastly, Jan, how would you recommend users use the survey?
Really important question, Kate. I think the survey is a great starting point for any valuation analysis. It gives you a great benchmark of the assumptions that you should use in your valuations. But valuations are exercises in judgment, and typically our survey provides a range of answers. And it's really important that participants use those ranges as a starting point, but combine it with their own judgment, other sources of research, both from our market and other markets, and that you apply that judgment that's so critical to evaluation in order to come up with your own assumptions.
Thank you, Jan and Matthew. It's clear that the survey has come a long way and continues to evolve with the market. Up next, we're joined by Zahir and Wadzi to unpack some of the key insights from the 11th edition of the survey. So Wadzi, has anything caught your attention? Has anything changed, remained the same?
The good news, Kate, is that the questions haven't really changed much, and this allows for better comparability between this edition of the survey and the previous 10th edition. However, there were a few minor tweaks. For example, the venture capital discount rates were previously buried under the specific risk premium section. This year, they have their own dedicated section showing the different discount rates for different stages of growth. I think this is quite relevant at the moment because we are seeing an increased activity in tech startups across Africa. And investors in these assets are asking the question, what is the right discount rate to apply to these valuations?
It's true. Tech startups are really heating up. Zahir, has anything stood out for you?
What stood out for me, Kate, is the data around infrastructure valuations, which is something that's really relevant in the African context at this moment. We're seeing some big investments across transport, energy, water, and valuations is a very important part of unlocking that capital to build those assets.
Let's dive into that. What are some of the key trends in infrastructure valuations you're seeing?
Yeah, so one of the key takeaways was the decrease in the market risk premium, which is a key input into the discount rate. And we saw between a 1% and 2% decrease across toll roads and renewable energy assets. And while that might sound small in a valuation context, that's pretty meaningful. And I think it talks to the lower perceived risk in the market, as well as perhaps greater regulatory certainty and stability. And it's a sign that infrastructure is really maturing as an asset in South Africa. And we're starting to see a bit more predictability.
That's really encouraging. So Wadzi, what do you think is driving that confidence?
Well, I think there are a few factors. It could be better policy stability and a rise in public-private partnerships. In South Africa specifically, we are seeing an increased interest from DFIs and pension funds. And I think that has helped to de-risk these assets and improve access to capital.
I'd also add that the financing environment is a lot better as well with the low interest rates, which makes these assets a lot more attractive. And I think that's maybe a question that we need to ask ourselves is, yes, the investment conditions are better, but are the valuation assumptions keeping up with the risks on the ground, especially in emerging markets where things change so quickly? We need to just make sure that our models actually reflect that reality.
That's true. And staying with infrastructure assets, one hot topic is the extension of the renewable energy asset life beyond the 20-year PPA term. What are you seeing in the market, Wadzi?
Very interestingly, Kate, 60% of the respondents in this year's survey say that they would actually consider extending the life of renewable energy assets beyond the typical 20-year PPA term. And this number is up from 18% in the previous survey. So it's actually quite a significant increase. I think it reflects a growing confidence that we have in these assets. And it could be due to better technology or maybe increased demand for reliable energy. In any case, it reflects a shift in how we think about these assets, not just the cash flows during the contract, but the potential for value beyond that. And it's not just a local trend. Globally, we've actually seen that extensions beyond the PPA term are quite common in mature markets. And these markets have longer operating periods, better data, which supports the extension of life beyond the PPA term. And we've also seen some good research around this. And the evidence does show that, with enough capital expenditure, sufficient maintenance, these assets can actually operate well beyond the 20-year PPA term.
But not everyone's convinced. What about the remaining 40% that are not factoring in this extension? What do you think are their reasons?
Yeah, I think it's a fair point. I think what the market will look like is still quite uncertain. And I think perhaps the 40% are thinking about future regulations, what tariffs will look like, and definitely grid stability. Because even if these assets can last longer, can you actually get power into the grid? So I think it's a bit of a balancing act between getting to the correct long-term value of these assets, but also factoring in these practical constraints that we're seeing.
Let's shift gears. Another hot topic is the recently announced South African inflation target of 3%. It's making waves in analyst circles and market commentary. How does these macroeconomic changes and moves affect valuations?
Yeah, it's a very interesting topic. And while we didn't specifically ask about CPI in the survey, it's very closely linked to other valuation inputs. And the proposed shift is very aligned to what we're seeing in the lower CPI at the moment, as well as lower bond yields as well. And majority of the respondents in the survey said that they actually use longer dated bonds for their risk-free rates. And we've seen these rates come down quite significantly in recent months, which supports the lower discount rates that we're seeing at the moment across the board.
And to add on to that, one would typically assume that a lower discount rate would result in a higher valuation, but you have to consider the fact that the inflation being applied to the cash flows and the terminal growth rate on the other hand is lower. So you wouldn't see that uplift in value that you'd expect from lower discount rates. Instead, the impact is actually quite moderated when you take inflation into account. And even though it's early days, I'd actually be quite keen to know what our audience thinks of the proposed inflation target and the potential challenges of achieving that in the long term. Because yes, it has been quite an area of debate in our team.
Thank you, Wadzi and Zahir. You certainly have given us something to think about. Up next, we'll be reconnecting with Matthew and Jan to hear what's ahead for the survey. So Matthew, looking ahead, what's next for the survey?
Thanks, Caitlynn. I'm glad you asked that question. We're currently busy preparing the East and West Africa surveys. They're at the final stages of production, so we should be releasing that soon to our users, which is something exciting to look forward to.
And finally, a big thank you to our respondents. Jan, do you have any closing thoughts?
Yes, thank you, Caitlin. Our survey is always just as good as the respondents that we get to participate. So I would like to say a big thank you to all our respondents for taking the time to complete the survey. And I hope that you find it beneficial for your work.
That brings us to the end of today's conversation. A big thank you to Jan, Matthew, Wadzi, and Zahir for sharing their insights and helping us unpack the key findings from this year's survey. We've seen how the survey has evolved over the past 11 editions, how it reflects the realities of today, and how it continues to be a vital tool for various decision makers across the African continent. If you haven't already, we encourage you to download the app on your mobile devices. You can search for the app through the Android or iOS app stores. To discuss the findings or explore how they apply to your business, please don't hesitate to reach out to our team. Until next time, thank you for tuning in.